Hi, this is Kerry Artak with Wicked Stocks bringing you the daily Apple report for Thursday, January 19th, 2023. Before I jump into the charts, please click like and subscribe if you haven't already, and share the content if you would with friends and colleagues. It does help us out a great deal. Let me backtrack just a little bit and remind you that a few weeks ago, we tested long-term support that had been anticipated actually since October, testing the 140s longer-term resistance. We broke into this zone, 121.67 to 122.46. The daily chart, there were other things going on, similar channel structures as well that contain these selling pressures. And from here, still anticipating the 140s over the next week or two. The 142.02 long-term speed line, able to contain buying through February. It is expected by the end of next week above the 131.82 to 133.32 area, which I'm going to show in just a minute. So there's that. That is the big picture. The 140s, 142.02 to 147.30 remains a by the end of October. Sorry, why did I say October? A by the end of February objective that actually may be realized by the end of next week, maybe this week. Tough to say, but I'll get into that actually right now. So this is our pullback support. A lot going on in the low 130s. You've got this former channel bottom at 133.85. I'm just calling that a minor point today. It really is this rising channel structure, 133.32 and 131.82. I'm just going to call it a range right now, a band of channel support that can absorb selling into next week. And from here, we can, over the next 3 to 5 days, push into that 142.02 to 147.30 area. Now, this is a wide zone. So the truth is, we can pick it apart. I've got it as a range up here, as you can see in the support resistance. But if we approach it in the coming days, I'm going to open this up and give you some minor points inside of it, because it would be a settlement above 142.02 that would indicate 147.30 over the following 3 to 5 days. And the way I'm framing this is, once again, we can top out in the low 140s and fall back into the low 120s again within a month or two of doing so, and not until we close above 147.30. And am I comfortable anticipating then the 170s over the following, I should say, 2 to 3 months? In terms of the big picture, holding above the low 120s will keep the channel top is in reach over the next, I'm going to say 3 to 5 months at the soonest, in the lower 170s, which is once again this 173.66 level that is in reach, let's say by mid-year, and it would be a settlement above 147.30 that would accelerate all that. But until then, this is your short setting zone if you're kind of a 1 to 2 month trader investor. We push into the 140s, you may be scouting out 122 out of the money puts that don't expire for at least 3 months. I would go further out. You're going to pay a little bit more, but you'll preserve that delta. You'll have a lower theta value. That is the time decay element. Let's get back to the day itself and talk about this 131.82 to 133.32 region. This is a zone you can buy into in anticipation of 142.02, possibly by the end of next week. Let's work our way up from there. I don't have them labeled, but I can describe them. We've got 135.94. That is the high settlement price on Tuesday. There should be a little play there. 137.29 is Tuesday's high. We could top out there intraday, possibly for the day. If we push through 137.29, I do think 140.35 is likely today. And that is this low here from late November. There was a low about a week and a half later in early December at 140 even. But it is 140.35. I'm kind of rounding up here where we could top out for the day. And of course, if we close today above 140.35, which does not look likely, but if so, then we should tomorrow test 142.02. Or once again, we can top out through February activity. Hi, if you enjoy watching our daily Apple report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Let's go back to the downside here. If we break or open today below 131.82, 129.69 is likely. And closing today below 131.82 would threaten a full unraveling of this rally that's occurred over the last couple of weeks off of that low area. That full unraveling could actually result in a retest of this. I don't know, this is not a, it is in the low 120s, but that 122.34 is not accurate on that chart. This is the accurate area here, 122.22 to 122.56. So if we close today below 131.82, whatever that means to you, whether you're a 1 to 2 week swing trader and you're playing the short side, or you're liquidating a long position that you entered because of dipping into, we did have a buy signal, as you recall, a few days ago above this area here, which is now in the 133.85 region. So, there's that. I've got, these are more levels that you can kind of pick through. The minor point at 130.66 is this former channel top, so forth and so on. So, I'm going to get back to what if we do close today below 131.82. I think you should prepare for whatever that means to you, the 122 handle once again, where we can bottom out, not only through February, but even into later year. And from here, the 170s are calling over the next 3 to 5 months at the soonest. And, last thing I'll say, and I don't mean to rattle anybody's cage, but if we were to close the week, and it's not going to happen tomorrow, but if over the next few weeks we do close below 121.67, the market maintains a very heavy dynamic as we continue through the rest of the first quarter and into the second. This would become a 2 to 3 month target, 102.73. And quite honestly, as I've been saying, I wouldn't be surprised if over the following 3 to 5 months we continue all the way down into the lower 70s. I know that sort of screams recession probably, right? So that's why I don't think it is likely. I don't think a recession is likely. That's my personal opinion. 2 consecutive quarters of negative GDP growth hasn't happened yet, but it might. And so we'll just see what plays out, right? The market would tip its hand long term if it closed below 121.67, then anticipating by the middle of the year the lower 70s. Until then, the market has already tipped its hand to the upside as we tested this long-term support area a few weeks ago, and we are expecting the low to upper 140s by the end of February, and by mid-year perhaps the 170s. I'm going to leave it at that. Please click like and subscribe. I appreciate it a great deal. Please share the content with friends and colleagues. I'll be back tomorrow with Friday's Apple Report. You have a great day.